Hello there, everyone. All right, now let's get our session started and moving. And welcome to Portfolio Cash on Fridays with Terence. Now, thank you very much for joining me and giving me your half an hour on a Friday evening, right, to listen to what I have to share with all of you. Now, today, I'm going to tell you about what I see in the markets, what I feel in the markets, and something you have to pay attention to, right, especially if you're invested in some of these shares. All right, now, the tide has changed for a certain category of shares, right? You need to be aware of this, right? And then be very careful if you happened, right, to be invested in any of one of them right now, okay? Right now. So let's get to our session and let's start officially. All right, welcome Tan, welcome Jimmy, welcome City Chai. All right, now, so thank you very much for joining me and let's get moving. Now, so before we start the session, if you are joining us for the first time, all right, please go to the link that you see in the banner, all right, okay, which is streamyard.com/Facebook. All right, click on the Facebook blue button so that your profile will be approved, all right, and we can see you when you leave comments, all right, during the Facebook Live, all right. Thank you very much. As I can see, many of you who are joining me today have already done so, right? That's why I can greet you in person. All right. Hi, Eileen. You've just joined us. Now, also next, as a disclaimer, right, I will be talking about my opinions. I will be suggesting some live trades that I'll put in my own accounts, right, which are funded with capital, right? But by no means, right, that anything I say or stocks that I talk about during the sessions, right, should be taken as any form, all right, of a recommendation. Right now, every investment bears a risk. So it is always wise to know what you're doing, all right, before actually doing it. All right. So you need to be aware of all your risks before going ahead and follow anything I say during the session. Right. So I need you to be aware of this. Okay. Now that all of this is said, all right, let's get to the information. Now, so I want to share with all of you a development. Right. So a development that's happened in the markets right now. Okay, it's what you see on the screens. Okay. Now we have this market that has broken the top. Right, and then after that, it has fallen way, all right, from the top right now. So we have the S&P hitting about 4,700 levels, right? But it didn't take it long, right, to reach, right, the 4,500 levels that we're seeing today, right now. So if I just put SPX on the corner, right, we are seeing SPX right now, all right, or the S&P 500 trading at about 4,552, right? And if all of you have been joining me regularly, right, remember what I said last week, everyone? All right, hi, Chong. Right? Does anybody remember what I said about this market? All right, I did say that we're going to have whipsaws, which means, all right, we're going to see more selling happening in the markets, which is probably more volatility, all right? But I do expect the market to hold, right? Why? We're coming to the end of the year. It is officially the last month, right, into 2021, all right? And this means, all right, that portfolios will be marked, right, very, very soon, right? Very, very soon. All right, now, so a lot of the fund managers, all right, will hold their fort, right, barring a one-off event, all right, barring, Omicron becoming another big pandemic issue that the world should be worried about, right? I don't see, all right, any change in this picture, right? There's not going to be any panic selling. There's not going to be fire clearance of their portfolios from, right, the big money or the fund managers arm. Yeah, all right, they are just not going to do so. Right, they have raked in their performance. They had a wonderful year. The stock market has excelled, right, until so far, right? So they're going to claim their bonus in less than 1 month right now. Okay, so they are not in the mood of selling. Trust me, they are not going to do anything at all, right? So as we can see, all right, that every sell-off, right, presents a bounce. Okay, but something you need to be clear about over here, right? In all the previous sell-offs that we're seeing over here, right, we see, all right, that there's not as much participation, right, as what we saw from last Friday, all right, and then going into, what we have on Monday. Yeah, all right. So we need to be very careful because right now there seems that all the selling comes with much more participation. Yeah, all right. Okay, of course, this can be attributed to the fears behind the Omicron's, new virus strains, right, which, again, everybody's uncertain about. So the market hates uncertainty. Right, so when it starts to feel uncertainty, right, you start to see all this shakiness, right, that's happening, right? But if good news starts to come about the Omicron, more developments, more understanding of the exact strains of the virus and what it can do, right, starts to appear, right, and then if people feel that it is, they overfeared, right, then it can actually be bullish all the way until the end of the year. Okay, but you are in a 50-50 ground right now. You are at a toss coin right now, right? So should you really be investing or should you really be trading heavily, right, in such a market condition? Not unless you're a big risk taker, right? So that's definitely something that you need to be aware about, right? But something more important, right, that I need to bring to your attention is this, right? One category of stocks, right, that have excelled over here, right, in the last 1 year, right, have been what we call the Wall Street bets, right? The poster stocks, right? All the short interest stocks, right? But all these same stocks, right, are now rolling over and dying, right? So yes, you may have made a lot of money joining the wave, right? But this is not the time, right, to be left hanging into positions with any of these stocks, right? Now, this is where, right, when you are invested into any companies right now, you have to start deeply looking, right, into the fundamentals, right? Yes, you may be investing on potential growth stocks, but there is a very gray area when it comes to growth stocks with profitability, right, in the future, right? Maybe of some disruptive, kind of technology or something like that, right? Now, they may not be profitable now, but you need to see that they are actually sustainable and can turn profitable, right? Versus the one that are just outright hype, right? That no matter what they do, right, the business just will not generate any form of income, all right, or they will not turn profitable. This is the time where you need to know exactly these things. Why do I say this? Because one of the hottest stock, right, during this craze, right, have been, all right, what we call, right, hang on for a minute, okay? All right, now, one of the things that, we have been saying over here, one of the hottest stock have been this one called AMC, right? But can you see what has happened over here, right? It has fallen from grace, all right? After surging, right, it has just been bouncing around, all right? And then now it has broken, all right, another vital support, all right, at $30. All right, now, because the company has just not proven that it can turn things around. It's not profitable. All right, so if you're in this stock, you need to be very, very careful right now. Why? Because it's turning, right? You need to watch exactly what you're doing, right? Do you still want to stay in this position? Because if you go look at the company fundamentals, right, can you see right now, right, that the company is just not making money? Yeah, right. Even before the COVID started, they were already not making money. Yeah, right. Can you imagine what's going on right now? Are people really going to flock back to the theaters? Yeah, right. Things are not going to improve. All right. It's not just them, right? Because if you look at other companies like Uber, right now, can you see the same thing is happening? Right, during this market correction over here, it is all these high flying populated stocks, right, they are suffering the brunt. Why? Because now with the fear that it's about to happen, all right, I said this, fundamentals have to kick in, all right, and for Uber, all right, now throughout so many years, they have never ever been, all right, or what we call really profitable over here, right? Look, right, 2016 they lost money, 2017 they lost even more money, 2018, right, they didn't make anything, 2019 lost money, 2020 lost money, right? They have never made money. So even when the company have sold more, look, sales per share, it has been growing, right? But yet the company has not found a way to turn a profit. So do you think that things are going to change for Uber with more competition that's coming in and them losing market share? Right? Is there anything that's going to change? No, right? All that's happening right now is what we call the hype, right? And the hype buying into a company with a minus 28 PE doesn't sound like a good idea. It's a terrible idea, right? Especially when the markets are right at the top, right? Can you see how everything is a recipe for, recipe for disaster? All right, it's not just them. All right, now this is not locally, right? Okay, but Lyft, right? Lyft, okay, also has not been able to turn any profits at all. All right, look at Lyft, right? It has the same story as Uber ever since it got listed, right? Look at the increase in sales per share, right? But the company does not have a way to monetize, right, what they're doing, right? Why am I saying all this? Why? Simple. Because, all right, the hottest listed one just took off yesterday, and that's Grab. Now, I don't know what Grab stands for or what, the future brings for Grab. No doubt, it is the market leader, right? But despite being the market leader, right? Now, has it been profitable? They're still struggling to make profits. So that is a problem. So before you go out there and go gung-ho, right, and be an investor of Grab, think very carefully, think very hard before you put any money, right, into such a stock. All right. Okay. Now, so I just want to bring this to your attention, right? That all these hot populated stocks on social medias, right, are the ones that are bearing the brunt, right? The story is over. The music has stopped, right? So don't go playing a game where the musical chairs. Okay, when the music has stopped, don't. All right, don't do that. Yeah. Okay. Now, so I hope I help bring this to all of your attention, right? Because right now, okay, let's quickly go to our portfolio. Okay. All right. Now, so where does our portfolio stand right now? Okay, let's look at our positions. All right, so we have, all right, yes, we have a couple of assigned stocks. All right, so we have Verizon, right, which expires on the 17th of December. So we have a call option of Verizon, right, and it's sitting right now. Right, let me just close this up. Right, Verizon is sitting at $50.80 right now. Right, so all right, we are in a nowhere position. No management, nothing is to be done. All right, so I'm not going to touch this. I'm just going to stay put in the stock. All right, next one, Rio. Right, we are assigned the stock at about cost basis of 75. Right, so I'm still hanging with that stock position as well. So do nothing. All right, now next one. All right, Himax. All right, now we are assigned and our cost basis is around about $10.50 or $11. All right, so once again, the stock right now, all right, has tumbled back lower to 10. Right, so I'm hanging on to the stock as well. Right, so no changes for these three stocks that we are assigned in our portfolio. Okay. All right, now next one, let's go to Intel. All right, now so Intel, all right, is now all right at around the $50 mark. So we have a 17 December, right, 52.50 put option. All right, let's go have a look at it very, very quickly. All right, it is now about $3.40. All right, we sold this for about $2.10. All right, so we're still slightly under the water. All right, but once again, all right, all of you have heard me hype on Intel, all right, very, very often. All right, now, so I'm not pressured by this stock. Okay, hang on for a minute. All right, now, so the fundamental valuation is so low, right, that I'm not worried about this stock at all. Right, first, all right, why? Some of you will be asking the reasons why, Terence. If you think that the market is going down, all right, won't you be afraid that this stock, all right, may go lower? I'm not. First, it's a very profitable company. It's still gushing out profits, right, in terms of dollar amounts. Right. Second, right, it is a stock that's trading at 9.5 PE. Right, with a market that's so expensive right now, how many good companies, good profitable companies can you find trading at these kind of valuations? Not many. Right now, third, right, the company still boasts almost a 3% dividend yield. So if you buy the actual stock outright at the moment, right, you would reap 3% return just on dividend alone, right, if you buy the stock. Right, so with all these reasons combined together, right, I don't have a fear, right, of staying in this position. Right, will the stock rebound before the 17th of December? I don't know. Right, because if the Omicron starts to clear up, right, the fund managers have reasons to be bullish again. Right, we may see this stock go higher after that. Right, but we'll see. All right, we'll see what it goes. Okay, now next one, CPB. Right, 17 December, $40 put option. All right, so CPB over here. Right, 17 December, right, $40 put option. This position should look good. Right, so right now we can close this for about 85 cents. So we are profitable in this position. Right, so I still like the valuation. It is still low on my perspective. Right, so I'm staying with this trade. Okay, I'm staying with this trade. Now, next one we have over here is Western Union. Right, we have an $18 put option. Right, as you can see, all right, the stock is not too far away from that, and we still have another 2 more weeks to go. All right, so I'm on 18 December over here. 17 December, 18 put. So it's about $1.20 at the moment. Right, so we are just barely under. All right, that means we are not looking at too big a losses over here. All right, but once again, all right, at 8.7 PE. All right, okay, for this company. All right, I'm not worried. Okay, I'm not worried. Now, next one, Harley Davidson. All right, now where are we? All right, we have a 36 put that expires in 2 weeks' time. We sold it for 91 cents. All right, 36 puts. All right, now we are slightly profitable today. All right, we can close it probably about 80 cents. Right, but I'm not touching it. All right, okay, so I'm not touching this trade as well. All right, now next one, our last position, which is EAT. Oh no, we have Tupperware. I'll look at Tupperware after this, okay? Now, so we have EAT over here, which expires on 17 December, 35 put option. All right, 35 put option is about 180 at the moment. All right, so we're also under the water. All right, so we have 2 weeks to go, so we'll hang on. Okay, now last one, Tupperware. All right, we have a 16 put also in 2 weeks' time. All right, today it's about 120, I would say. All right, so we're also under the water. Right, so are there worries, are there concerns, Terence, when your entire portfolio looks like they're underwater? Right, the answer is this is where you have to come back to the reasons of why you decided on the stocks. Right, if you know your reasons of getting into a trade, right, so even in times like this, when your trade doesn't look good, it doesn't look well, right, you are in what we call the comfort zone. You know exactly why you got in. So ask yourself the question, has the reasons changed? Right, and for me, like I described to you just now, right, the fundamental reasons behind these stocks have not changed. All of them are still currently very undervalued, right? All of them are still profitable businesses, right? All of them are in industries, right, that can still sell and make money at the moment, right? So nothing has changed fundamentally, right? It is just the market playing what it does, and that we cannot control. Can you see now? All right, so for this reason, I can only let the market play out whatever it wants to do, right? But I must know exactly what I expect out of every trade that I have money on, right? And for right now, I'm comfortable with that, okay? All right, now, so take this as a learning point over here, right? Because, you know, that's what I want you to get, right? By joining me every single week, right? Pick up one thing that you can learn every week, right? And make yourself that better investor. Right? And should you be interested, right, to explore more ways of selling options with lower capital, with smaller portfolios, right, join one of our available mentorship programs, right, and then I can come in and help you at a deeper level where you can trade with me every single week, right, and we can make some good trades together. Right now, so without further ado, let me add the new stock that I want in my accounts this week. Okay, right now, so the stock that I want to look at today, right, it's another good old boring company. All right, so today we're going to look at CAG. All right, I think we have traded this stock before, right, and the story has not changed. Right now, this stock is right now sitting at a 12 PE. Right, it currently yields or has a dividend yield of about 4%. Right now, that's really high and boring, old boring. It's a food company. It sells packaged food. Right now, so let's look at what's the PE ratio. Right, the 5-year average is at 20 PE. All right, so the stock price is usually 20 times the earnings it makes. All right, but right now it's currently selling for only 12. So what does this tell you? It's a bargain. All right, so since it's a bargain, all right, I'm going to get some money into my pockets over here. All right, now, so let's look at the charts as well. Right, and this is what we see, that the stock has made a lower low, right, but we actually see a divergence happening on the technical indicators. Right, so this is also a sign whereby it tells you, all right, that the selling, right, maybe, you know, maybe in a state where it's ready to reverse. All right, so I'm more than happy to get in on a trade like that. Yeah, now, so I'm going to position the trade to create some cash flow. All right, so I'm going to go for the this time. All right, I'm going to go to January. All right, because December is too short already. Now, so I'm going to go to January. All right, I'm going to aim for the 30 puts over here, right, for this stock. Okay. All right, so I'm going to sell the 30 puts on CAG tonight. Okay, now, so I'm not taking an exceptionally big position. It's the same old 3 contracts, all right, that I'll be taking for stocks that I'm happy with. All right, and then let's see. All right, as usual, it clearly seems like some of you have jumped my gun over here. Ah, man, some of you are jumping my guns. All right, remember, okay, all right, first, all right, just as a disclaimer all over again, all right, be always aware of what you are doing and all the risk involved, all right, before sending any of these trades live into the markets. Yeah, all right, I need you to be fully aware of these, all right, before doing so, okay? All right, now today I'm not gonna haggle. All right, I just want to get the trade moving and going. All right, but I do believe more. All of you can get better prices. All right, but I've just sold three. All right, so three contracts of the Cardinal, 21st January, $30 put option. All right, and done at 71 cents. All right, so this trade is done on my official account at 71 cents. All right, so let's go jotting this down. All right, and do our calculations. All right, now so. All right, this is going to be trade 79, right, on CAG, right, and for the 21st of January, right, we're doing a $30 put option, right, and today is the 3rd of December. Right, and we collected 91 cents. Okay, now, so this trade is going to bring me an additional cash flow of 273 US dollars for three options. Right now, what's the margin that's set aside? That's $9,000. Now, if you're asking why, because you're new to the session, right, I only sell cash secured puts, right, cash secured puts. So, right, I'm setting aside 300 shares to buy at $30, where the total capital is $9,000. All right, now, so I've set aside the cash. So even if my customer makes a claim, I have the cash ready, right? So doing it this way, my portfolio will never run, right, into what we call margin calls, right? So that's why this portfolio, right, is safe as long as the fundamentals behind the company is strong, right? Now, so this trade brings a 3.03% ROI, right? And the trade lasts, right, for what? 49 days, right? If I'm not wrong, 49 days happens to be 7 weeks. So I'm just going to divide this by 7 weeks and then annualize it by multiplying by 52. So this trade comes in at 22% ROI. All right, 22% ROI. Now, so this fulfills our category, right? Was it 71 cents? Pardon. All right, now, so that's the error. Thank you very much for correcting. So it's 2.37%, right? So it comes a little bit short at 17.6%, but I'm still happy with that. Yeah, all right. Now, it's close enough to my 20% returns, right? So I'm still near the target, right? So it's one more trade that brings me close enough to my annual target, right? So I'm going ahead with the trades. The trade is already placed, right? And this trade brings an annualized ROI of about 17.5%. Yeah, all right. Andy, I got the change. Thank you very much, John. All right. Now, so that is the only stock that I'll be putting up in my portfolio as well, right? But with all the stocks that I have still open, right, the current portfolio exposure is about 108, right? Now, $108,000, right? So that sits at about 93% exposure on my total account capital, all right? On my total account capital, okay? All right, now, so that's it. That's me for this week over here, coming live to all of you, right? Showing you how you can add additional cash even in market peaks like right now. Right, so many people tell you, hey, Terence, this time, or maybe not me, okay, but some of you, right, they're telling you right now you should be holding more cash. Right now, I always believe in this, right? As long as you know what you're doing, as long as you know your path ahead, right, there's always money, right, to be grabbing in the markets, but you need to know what you're grabbing. Don't grab the wrong stuff. Yeah. Okay. All right. Now, so I hope you enjoyed the session once again. Right. Do join me. Right. Do join me next week. Right. On Friday nights, which I run the session every Friday. Right. Barring unforeseen circumstances where I'm not available. Right. So I'll see you live again next Friday at 11 p.m. Okay, everyone. Right. Thank you very much for joining me. If you did enjoy the session, before you leave, please help me click the like button. Right, so the Facebook algorithms, all right, will recognize the videos, all right, and reach out to more people. All right, now, so thank you very much, and I'll see all of you really, really soon once again. This is Terence Tan signing off for Portfolio Cash Flow on Fridays, all right, with the public investors over here. Bye for now, everyone. See you. Have a great weekend.